Today, I'm going to focus only on one strategy on a particular session, Choppy sessions. The reason is that we covered how to trade with our product on a trendy market, something moving either up or down, but we don't see the market trending every single day, but we do see the choppiness every single day. Even the market is trending, there will be a small period of time it will get choppy. So that's why it's very, very important for you to master the art of finding the choppy session, and then how it starts, how it ends, what are the boundaries, what are the internal details that you can't see through the naked chart to make a decision. So we're going to go through as the time permits. I want to show you some live examples. So let's get started. Let's get going on the topic. All right. Before we get started, as a disclaimer, please be aware this presentation today is educational purposes only. It's not trying to it's not solicitation to buy or sell any features or options or any other instrument. All the hypothetical or similar performance and the past results that I'm going to show today is only to present how it worked in the past, how we can leverage the strategy. The past results does not guarantee anything in future. Please aware of the SEC guidelines, CFTC rule 4.14. While you have while we go into the webinar, if you have any questions, you can type it here. If you have any other particular clarity that you need, please reach us at info@buysideglobal.com. Email us. We will respond on the same day or within 24 hours. If you want to talk to us on this number 435-659-8581 anytime during New York market over business hours. This is my agenda today in terms of just focus on what is a choppy session. How would I define it? Everyone have their own definition. How would I define it in terms of day trading, get in, get out, as well as finding the way to effective strategy as well. And also, I'm going to focus a little bit on the range. The range is a key. I'm going to talk about in detail what is a range, but that is the ideal information that I'm going to use in the strategy in more in detail. So learning the range is very much important. Also, we're going to talk about how to trade, when to trade, and when not to trade. That's two different things. A lot of traders choose when there's a choppy, they just want to stay away. But when there's a choppiness, there's a lot of properties, there's a lot of behavior that comes with it. The problem is that you guys don't know, or we are not aware of those properties to leverage those properties in your trading. That's what we're going to talk about. When there's a choppiness, there are a lot of things is going to repeatable pattern. That's once you learn those repeatable patterns within the choppiness market, that's what is going to give you the edge to even to make money or scalp or break everything. You can do only if you know the internal details that you're going to miss a lot. I'm going to talk about the strategies. Also, I'm going to talk about how to maximize your trade, because that's two different things. Entering a trade is different from maximizing your trade. Two different things. People get confused a lot. You can enter a great trade, great entry. If you don't know how to maximize it, if you don't know how to exit properly, you're going to lose a lot. That's why maximizing the trade is a little bit different. And of course, we're going to finish with the offer that what we're going to talk about today in conjunction with something you can get started immediately. Okay, so to give a perspective of what we're going to focus today, I'm going to teach you on how to find the choppiness and how to trade on those choppiness on those market. All right, so just give you a perspective of what you can expect end of today, what something you can go away with. Meanwhile, if you can see if you have any questions, anything, please send your questions on the GoToWebinar so that I'll be monitoring that section in a regular interval, so that if I have anything important on the slide or a topic that we're covering. Sometimes the same question I can answer to everybody here, so that it'll be much better. Okay, before we get into the strategy details and trading, I wanted to go through some slides that I go through almost every single webinar. The reason is that you cannot trade in any market until you know how the market moves, what are the fundamental moves, what is the foundation that we're going to rely on in the strategy, right? So some traders, when I speak to a lot of traders, they say, you know what, I don't want to understand, just give me the signal to get in and then give me the entry to exit to get out. We can do it. We have signal indicators, but if we do understand the foundation, why and how behind the trade, you're going to do a lot better. Trust me on this one. Please understand the foundation. Here, what we see here, how the market moves. Every market move, every single day, it contains like 4 sections. Either it's going to trend up, trend down, or it's going to, when the market goes up and stops, and then it takes a pause. When you say a pause, it stays sideways for a long time. We call it as distribution or accumulation. We're going to leverage those 2 regions today. That's what we're going to focus on. We're going to talk about the accumulation and distribution. That's what I'm going to call it as choppiness region, because we covered in depth in the previous webinars on how to trade on trending up or trending down, different strategies. I'm not going to cover that today. If you are curious about learning those strategies, please go to our YouTube channel. All the recording from the previous webinars are already there. You can check it out. Today, let's focus on the choppiness session that we see here in distribution and accumulation. Okay. Before getting into the strategy, I think all of our strategy we're going to talk about today, we are going to use our indicator supply and demand. For that, you need to understand what is a supply, what is a demand. Demand in general, where there's a strong supply of buyers' demand, where they will take the price, push it up, or reverse the market from there. Anytime we say there is a demand in the particular price range, it literally means this price range have a lot of buyers' interest. The price will be hard to go down below the price range. That's anytime there's a bounce or like a pause on the downslide, we call it as demand. So in other words, area where the highest interest in a going long or a buyer's interest. On the converse, it's the same way. When there are a lot of sellers are interested in selling their holdings or going short on a particular price range, that's what called a supply zone. So anytime the market moves up, it reaches a particular point where a lot of sellers are like either entering short or like closing out their trade where they are long. That's what we call the supply zone. Market comprises of supply zone and demand zones. Continuously, it'll keep on changing while the market moves. So that is also with the factor how the market is going to move, how the market is going to trend. So in very high level, the market bounces between support and resistance level. Support, demand, both are same. Resistance, supply are the same. Just different traders use different terminologies. Don't get confused. In this case, when we say support, it's also called demand. A lot of traders try to find their own way of finding what are the demand and the supply zones. They try to draw manually so that they will have their own way of calculating those things. If you don't leverage the supply and demand zones, you are missing out something. You are going in a blind zone. That's why you need to trade always, doesn't matter what the strategy is, always know where there are highest buyers interest, where the highest sellers interest. Without that, it will be just a gambling. That's from my definition. Okay. So here is a key indicator that we use in all the strategies that we're going to talk about. So this will draw, it's called BSG supply and demand indicator. This will draw the demand zones and the supply zones every time there is a market supported buyers coming in or sellers coming in, making either the reversal or pausing the market. We have the algorithm built in to show you continuous um, depiction of supply and demand zones. We will leverage those information in the strategy today to form up to registration. Okay, like I said, when there is a trend, it's relatively very easy to identify. By looking at it, you can see there's lot of indicators, products, strategies out there how to trade on when the market is trending, right? But how many are those struggle or like even lose money when the market hits this choppy session? So that's why if you want to master how to find and then how to trade on choppy session, if you master that part, then trading on a trending it's much easier. So learn the hardest part. I think the easier things fall in place. That's why it's very critical to learn about choppy sessions. Also understand that just because the market is moving today, it's like 1% up, 2% up, 3% up in the on the S&P, doesn't mean that they don't have a choppy session. Even the market moves on a trending up, there will be intermediate choppy sessions that you need to aware of. Those are the key opportunities that you cannot miss. We're going to talk about a little bit today because choppiness going to happen every single day, whether it's trending up or trending down or flat days. It's going to happen every single day. That's why you need to learn those. Okay, so let's look at the market definition. What is a choppy session? Choppy session, choppy market refers to a market condition where the price stays in small range, just bouncing in those range, either the short period of time or the long period of time, doesn't matter. As long as it forms a boundary and then bouncing in the same kind of price range, that's what we call it as choppy session, right? So, like I talked about, I'm trying to show the same screen that we shown that you saw before. You can see the price bounces in those particular regions while the distribution is complete. That's what we call it as choppy. Both accumulation, distribution, both are choppiness. Okay. When it comes to learn to trade on choppiness, I want you to learn these 4 key factors. You need to know when the choppy session starts. Okay, exactly when does it start, and then you need to also know what is the actual boundary, because when we talk about boundaries, price is going to bounce in those regions. That means you need to know the top and bottom boundary of the clear boundaries of the session. That's a key information that you're going to leverage later point in time. So once you start it, I want you to learn. You don't have to learn. I'm going to show you in terms of the indicator is going to help you a lot. So, but you need to visualize it and see what are the levels. And also make sure those boundaries are confirmed and the price is contained within those region. And then we're going to talk about how the breakout works and other things. Okay, so how to find a choppy session? We talked about in terms of the boundaries and everything. We are going to use our supply and demand indicator. Okay, so let me go back to this screen so that I can explain it better. I show this screen a lot because this one shows both when the market is trending and as last market is choppy. Okay, the reason is that if you can see, first let's look at the trending market. And let's say the market is trending up, you will see continuous demands are formed, higher and higher demands are formed. The buyers are keep pushing the market up, whereas the supplies, the sellers are getting broken by the buyers. The supply zones are getting stopped out, not stopped out. It's broken through and ending. You can see from here almost the trending. The demands are forming, supplies are stopping. That's how we can see. But once the choppiness, every market, like I told you before, every market, let me go back one more time. Okay, right there. Every market, when the market trends up, it has to pass most of the time. Sometimes reverse immediately, but most of the time, 90% of the time, every market up or down goes through short period of distribution or accumulation. That is where you need to get ready. Okay, so doesn't matter up or down, once it reaches a particular phase, it's going to create a choppiness session, small session. Okay, let's go back to the chart again. Now, in this case, the market moves up, and then what happens? The small choppiness region starts. What is choppiness region again? The price gets contained within a price range. Can you see the purple, the arrow, where from here the demand formed is not broken, supply formed is not broken, price is just bouncing those areas. This is what we call it as the rectangle region or the choppy region. Okay, once you learn how to find this region, then next step is to how to trade it. We're going to talk about that a little bit later, just in a few minutes. Okay, every market will have this region. In terms of, in this case, I just want to show you some, let me show you some examples. In this case, you can see the demands on the bottom extended, supply extended, price just contained on those things. Okay, next, let's look at even here, the price just stayed in between those areas. All right, so this is a good example in terms of, I said, even the market is trending up or trending down, like one way, all day, one way going up. There will be a phase of market. Even the market is trending up, going up one direction. If you look closely, the market will pause for a choppy session, small duration of time. That is when you have to take the advantage of either exit your trade what you're already in or prepare to enter the next trade. The reason is, after that particular choppy, that particular region, either it's going to break out up or down. We're going to see how it's going to happen on both ways. When the market is whole up, is going to, obviously it's going to break out on the top. But this is very important to understand. Even the market is trending one way, just one way. It's going to have in between passes, in between choppiness regions. Again, the same thing, extended supply, extended demand. You can see extended supply, extended demand. You need to leverage those information. Learn to find those regions. Okay, let me check if you have any questions before I go along. Okay, I don't find any other questions so far. Okay. Okay, so this is yesterday. I just took a screenshot from yesterday in terms of how the market moved. How many of you can see those choppiness regions here? In terms of, can you tell me exact time where it starts, where it ends? Can anyone tell me what you see here? How do you identify, like I mentioned, extended supply zone, extended demand zone? Where can you see those things? Here it is. In terms of, I drew the line just to see where the demand is like extended and the top supply is extended. Those are the price boundaries, this particular choppy region. And then the market moved and then trend up, and then it passed again. So another choppiness region again. That's why even the market moves either way, there will be in between passes. So that's why I clearly drew the line where it started on the top boundaries and where it ended. The whole strategy that I'm teaching today relies on one information. You need to learn to find this boundary when it started. Okay, if you learn how to find these boundaries exactly the same way, the price is just bouncing in those regions, you know, clear top, clear bottom. That's all you need to know. That's all you need to, as long as you learned your eye to see those boundaries, those choppy regions, trading is much easier after that. Okay, so I have one question here. Can I use the same system for any other instrument? Yes, this is a trading strategy. I'm going to show you the same thing for ES, NQ, even stocks. It applies to every single instrument, any market. It's not only for ES. Market moves the same way across all the markets. So forget what I see here on ES. This is the same fundamental. Doesn't matter you're trading on ES, NQ, CL, or the stocks, anything, it applies for the same. You can check it, go back and check it, it will be the same thing. All right. So now we know the regions. Okay, we saw the top boundary, bottom boundary, and then market is just moving across. Next question, how can you trade? Okay. Okay, just I highlighted those rectangle regions so that you know how to visually see it. Okay, next, how to trade it. You need to enter the trade when it's a clear breakout from those rectangle, and also in terms of once it's broken, you just can't enter the every breakout. Sometimes there will be false breakout. You need to confirm at least one or two. We're going to talk about other confirmation out of the zones as well as BSG levels, but you need to wait for the confirmation. Okay, and also once you enter the trade, make sure your stop loss is always follow the demand or supply zone. Okay, let me look at the same trade now just to see. All right, okay, right here. If you look at the same, once we saw the rectangle, I'm just waiting. I'm waiting and waiting. At the same time, we can see here, it is broken through here. Is it a signal right there? No, because the next bar, it came down. This compared to here versus here, you can see broken through, but it is supported by the demand zone. Can you see those information here? The difference between the false breakout versus the real breakout here from the rectangle, from the choppiness. In here, when the price broke out, that a new demand zone formed gave the confirmation on the clear breakout. Whereas here, it broke out, the last signal was really the supply. It doesn't have any confirmation. It returned back to the region, bounced again, and then the supply just extended. That's why you need to know once breakout, also supported by the new demand zone, that's the confirmation you got into the entering your trade. Okay, once you enter the trade, you need to keep a stop loss. Let's say this is a long trade, your stop loss should be below this demand. Market moves up below the demand. Sometimes if you wanted to just trail based on 10 ticks or 12 ticks, it's up to you, but I would like to always use my demand zone. But trading is personal, always use your own ways, but my suggestion is trail the demand for the long, trail the supply for the short. Okay, once you enter, until you find the next rectangle, you're not supposed to exit. Just manage your stop loss better. Don't exit until you find the next choppiness region, because even the market reverse 95% of the time, it won't reverse abruptly. It's going to go up, pause. The pause is another choppy region. Okay, the pause is another choppy region. Once you see another pause choppy region, that's if you are in the trade already, exit. If you are not, wait for our next opportunity. Okay, this is yesterday. This is the trade I made yesterday. Exactly same breakout, and then I enter. My stop was here. My stop was here. My stop was here. I didn't exit here. I waited for the return. I exited right here. Okay, so I always have 2 ticks below my demand zone for a long. My stop was here. My stop was here. Stop was here, 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 and then I got stopped out right here. So this is the best example I can show you. Let me show you a couple of examples as well. Any questions so far? Anyone have any? Before I move on with the details, do you guys understand what is a rectangle? What is a choppy session within a trending day? Particularly, do you guys understand what is the top and bottom boundaries that we are waiting to get breakout from the choppy region? Anyone? Just want to make sure that I explain it in the right way. Okay. All right. So this is on the same thing. Yes, I think you can see price gets bounced same way. This is today. This is today on the YI. I just want to show you this strategy works in all markets, not just ES or I trade ES only. Okay, I just trade ES only, but I just want to show it works across all instruments, all markets, including stocks. Okay, so in this case, you can see the boundary, bottom, the demand zone, almost from morning. It is just keep on extending, not broken through. On the top, supply extended, so price is just staying in those region. Okay, once it's broke out, I waited for the confirmation on the demand to give me the confirmation. That's the real entry. Okay, this is the real entry. You need to have the confirmation. Why? Sometimes we get the false breakout and then return back to the region again, like we saw before. Remember that here, what is it? Not here. Here it breaks about and then returns immediately. So wait for the confirmation. Wait for the confirmation. Okay. This is crude oil. So this is same thing. Another best example in terms of we can see the supply on the top get extended and then the demand extended, forming the clear boundary on both top, and then it broke out. But we cannot take a trade because it could reverse. Yes, it did reverse. Once the next breakout, supported by the demand signal above the top edge, that is a clear entry. That is a clear entry you should leverage on. Okay, don't trade every breakout. Every breakout could be you end up having false breakout. So wait till the supply demand confirmation, or you need to wait for the order flow zones confirmation. That's one of the amazing confirmation signal that I use. I use three indicators, just three indicators on the strategy: supply zone, supply and demand zone, order flow zones indicator for the trend and momentum confirmation, and the levels. I cannot trade against levels. I'm going to talk about a little bit here. Okay. Okay. So I talked about in terms of how to form the boundaries, how can I enter everything. But that's not all. Actually, I have some more layers. I just don't want to confuse you. That's why I showed you only with the supply and demand indicator. In the real world, I have my three indicators: supply and demand, order flow zones, and then the BSG levels. Okay, so how will I use it? Order flow zones is the clear momentum and trend indicator. Even sometimes when we see the naked eye, we can see the red and green candles. It's really confusing. I want to know clear order flow supported direction of the market. So in this case, you can clearly marked by either, doesn't matter if you look at from here, the arrow here, if you don't have the indicator, it will be just alternate red and green candles. But if you turn on the order flow zones, it's a amazing way to see what is inside the candle, where is the real momentum is happening, short period of time. Okay. So every time I take a trade, I need to make sure if I'm taking a short trade, I need to see a clear red candle. I'm not going to take a trade when there is a yellow candle or a blue candle. Red means clear indication of the bearish. Blue means clear indication of the bullish. Okay, you can see in terms of the yellow is when you are in the trade, when there is a yellow candle, you should stay, don't exit, because yellow means indecisive, not like a opposite signal. Yellow means indecisive. That means if you are in long trade already, there is a yellow candle, just ignore it because it's just indecisive until you see a next at least two consecutive red candles from the order flow zone. You don't have to exit. I wait for sometimes one big drop will happen, but one red candle. No, I wait for if I'm in a long trade, I will wait for at least two red candles. On the converse, if I'm in a short trade, I will wait for two continuous blue. Yes, I will not enter. I will not. For me, yellow means I ignore. I don't even make decision on yellow. So if you're in a long, I just ignore the yellows. If in a short, I will ignore the yellows. Okay. Yellow means indicator says it's not able to decide which side the momentum is. It just mark it as yellow. But blue means bullish, red means bearish. Okay. If there is one indicator I never really trade against is BSG levels. If a lot of I don't believe in really the win rates, because win rates is most of the time is misleading information. But if you look at this particular indicators prediction of market levels, it's amazing to see how many times it hits at the targets and return all the time. Doesn't matter, it's ES, NQ, stocks. This indicator is a phenomenal indicator. The way it works, it's going to give you, moment you saw market opens, it start printing the target. Okay, it start printing the target. Once, let me show you. Okay, here, the line starts here, the purple line and green line. It starts when the market opens. For me, I'm in Chicago. 8:30 is my market open. My 8:30, it starts printing. Okay. Once you see the purple line, the market is right somewhere here when the market opens. That means market most likely is going to touch at least for sure green, but high likely is going to touch the purple. So that means if I'm somewhere here, I will not take a long trade. That means you need to never trade against the blue BSG levels. You'll be really amazed how many times the market touched and reversed. That means that is the level is going to touch most of the time. Okay, let me show you some of the properties, some of the important reason. Okay, you expect every time the price is going to touch the levels. I call this indicator as the price magnet indicator. Why? Every time, every single day, almost every single day, the price is going to touch and then move and touch and move. That means it's going to attract the price towards that level almost every single day. Sometimes it's going to hold the price on the level for a long time. When that happens, the high likely market is going to go other way very, very fast. Let me see some examples. All right. So in this case, market came here, start somewhere, touched and reversed, touched and reversed. You see this one? Somebody asked a question in terms of, does the level change while the market moves during the day? No. When it calculates that this is the target for today, it is the target for today. It will not change until the market closes. So the accuracy and power of that indicator is so powerful that whatever it predicts in the market opens, it stays the same until the end. You'll see how many times it's going to touch it. Okay, so I took some old screenshots. Again here, market started here, touched, returned, and stayed there. Okay, look at that. Again, look at this particular. It struggled to reach that first. It reached the first target, stayed there, and then reached the second target. It's called the extended target. The reason I'm showing you this, you need to have it so that you never trade against it. Okay. That means when there is a breakout happening, there is a long signal. The long signal is right near the purple line. You don't take it because it's going to contain the market. So I'll show you some other examples some more. Again, market started, touched, returned, and then touched again, went to next level. Time and time again, this particular indicator stops amazing me. Look at this, touched, time to the target, and then finished there. It touched and then entered in the other region. Okay, look at that. How many times it touches the same? Prediction is such accurate that it's touched at least twice here. Started the market, went to the region, extended region, it's ES chart. Okay, got it. All right. So this is from today. Actually, I wanted to remove the indicator so that you can start fresh in terms of without the indicator. All right. So this is what we see in the naked chart, right? I think sometimes we need to have the inside information. This is what we see in the naked chart. First thing first, let's try to find the rectangles and choppy regions, and then I'll try to build you little step by step so you can understand how I'm going to find, confirm, second confirmation, and then trade. Okay, so this is the naked chart. I'm showing from the 8:30 because I'm in Chicago time. That's why I wanted to show you from my day start. Always. Okay, so let's go. Okay. All right. Okay. When the market started, I think the first one I wanted to visualize is right here. I'm not sure you can see it or not. The market stayed in here. Once I see that the price stays there, I wait for the confirmation. This is the first trade. I didn't take it today. I was preparing somewhere, but this is the trade I will always take. But here, the market moved up. Always the market moves in higher highs and higher lows. Okay, higher highs and higher lows. Once the higher high is getting stopped over, you can see that the supply zone is stopped over and then getting extended. That means we reach the next rectangle. That means, let me draw right here. Okay, this is the next rectangle, meaning the price is contained. You can see went up, came down, touched the demand again, tried to go past the supply, failed, and then coming back. That means this is where it contained. This is where it price contained the next choppy region. Once it's broken through, once you see the next supply confirmed outside, this is the confirmation here you can enter. But you can't enter just like that. You need to have a confirmation system. That's why order flow zones is one of the most important information that you need to have. Okay, not here. Okay. Now you can see in terms of not red and green candles. Here you can see it's choppy and choppy, yellows, reds and yellows. But once it's broken out and the signal formed, can you see the momentum? Just blue candles, just blue candles. This red candle is not from order flow zones. This is from the supply and demand marking that supply. But if you look at from here, once you entered blue, yellow, blue, 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 first red happens here. This is where I would exit. Okay, that means order flow zones is a second confirmation. Also, it's going to help you to stay in the trade. We talked about a lot maximizing your trade. Don't get threatened or get nervous when the market pullbacks. Trust on the momentum. Look at this. If I don't have the order flow zones on, this candle will be in red. Okay, this candle will be in red. Check it out. These candles. Let me just keep it here to show you. Can I see that? Green, red, green, green, red, 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 green, red, 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 red. It's such a confusing. We don't know. Those are the bars you're going to trigger you to exit your trade. Those are the bars will make you nervous, going to trigger your exit. Okay, this is why you need to have a reliable system that you can tell you in terms of you need to stay in the trade. Okay, now look at here. It'll mask everything, the red and green candles. It just give you where is a momentum. Where is a momentum? Okay, first order flow confirmation exiting is right here. This is, if you entered here, this is you would exit. Okay, on the other way, on the other end, if you had entered here, you stayed, you got confirmation. Okay, order flow zone confirmation, all three red candles, you entered, staying. But moment you see the blue candle right here, it did not last long, at least few points, but it gave you a clear confirmation that okay, order flow is changing. Order flow is changing. Not here, here. That means you could have exited right here. Okay, understand the importance of order flow based trend and momentum confirmation. If you don't have it, if you just have red and green candles, you're gonna get nervous on your trade. You're gonna exit. You got to maximize your trade by looking at into the candle. Okay, so now let's look at the next one. Now we saw 1, 2, market move down and then market reversal. Okay, now I'm not sure whether you can see it or not. Here's the next rectangle. Came down, touched, it could not break through this demand zone. It bounced, it tried to go up, tried to break through that, and then no, it bounced back. That means those are clear indication that it's a choppy region started right here. It cannot broke through on the bottom demand zone. It cannot break through on the top supply zone. That means this is the boundary. It's formed right here for the next choppiness region. Do you guys get it? Do you guys get it so far? So if you can see, okay, now I can say, okay, now it's a confirmation that both side was rejected. Oh my God, this is my choppiness region. Once I marked it, I'm ready for the trade. I'm ready for the trade. Okay, so now I marked it here. This trade I took, actually, I exited a little bit before because of webinar, but I just took this trade because look at this. Now we see 1, 2. I got confirmation that it is a choppy region. I want to wait for the exit breakout to take the trade. I thought I'm going to have an exit here. No, it rejected and then went up, It formed another boundary. Okay, that's good. Extension happening. It's a clear. When it happens here, that means a clear indication that, okay, confirmation that Japanese region, I really want a clear breakout. Look at here. There's a demand zone here, went out and then returned. Okay, even though it's a down candle, look what order flow did. Order flow gave me the blue bar and then yellow bars. Now price finally broke again with a strong. There's a new demand formed. This is where exit my entry is. This is my entry. Okay, this is my entry to take a trade. Okay, I wanted to show you one more thing. Okay, one more thing. Okay, I'm not sure you can see now. I zoomed it out. Can you guys see the next rectangle? Do you guys see this, the bigger rectangle now? Smaller rectangle, summer region. Now I entered here. Almost nervous here. Okay, there is a supply zone here. It might push it back. Should I exit or not? But like I told you, trust order flow zones. Trust order flow zones. I am not going to exit until I see the red candle. So what did order flow zones did? Even though down candle, down candle, down candle, it did not give me the red signal, red bar. That means order flow did not confirm there's a downtrend. Stayed in the trade and then moved my stop to here, here. And then when I zoomed out, I saw the bigger rectangle. Okay, that means I really want to break out from this bigger rectangle. It did break out. Do you see that? It did break out here, confirmation here, and then it went all above. Okay, this is where market ended. Any questions so far? Do you guys understand what I'm trying to convey? Look for the smaller choppy regions and then try to leverage the breakout confirmation with. Let me also tell you in terms of how important you need to add the BSG levels and how it's powerful as well from today. Okay, let me add the levels today. All right. Okay, so market started. Look where market momentum went and where the price magnet got the price and then hold the price. Can you guys see this? BSG levels is the where the price went there and then hold the price for a long time. It went down. Look where is the push and then touched and then came back again. Exact the BSG levels prediction. This is the power of BSG levels prediction. Okay, in terms of again when there once finally broke through, it went up.